Hey guys, this is the Investors Channel, and today I'm going to recommend a stock called Molson Cools, or TAP for short, like as a ticker symbol. But in case if you guys don't already know, they make those Cools beer that people love drinking, and they have a market cap of $12.17 billion, which means, well, they are up there. They're a pretty huge company.
After a solid start in the first 4 months of the year, May and June were challenging, reflecting unfavorable weather and weak industry demand across our major geographies, resulting in a disappointing volume performance in the quarter.
So I guess May and June might have not been beer drinking weathers, but keep in mind, this is still like one of the most popular beer companies, and also mind that people still do drink beer. Maybe they didn't drink as much in May and June, but they did.
We also, through the quarter, maintained our focus on cash flow through ongoing cost savings, productivity improvements, and improving our working capital.
Oh, there you go, guys. That also means good dividends, because they've been focusing on cost cutting, which kind of little makes up for the fact that they're not making as many sales, and cash flow, which means you have a great dividend. And speaking of dividends, the yield on this stock is 4.05%, meaning that they pay $2.28 in dividends every quarter. Oh, and they can well afford to do that because their earnings per share is $4.13. So if you think about it, it's like a 50% payout ratio, which isn't too bad. They're not giving most or all of their money away in dividends, and they are certainly not borrowing money or raising capital to pay the dividend.
We remain resolute on the ambition to improve our top line through increased investments in our brands, portfolio premiumization, and innovation initiatives, including the launch of our Trust Cannabis-infused non-alcoholic beverage portfolio in Canada later this year.
Oh, and you also heard how they said they have cannabis non-alcoholic drinks. Well, marijuana is becoming legal, and if people drink a lot of beer, they're more likely to smoke weed as well. So why not put some weed in the beer, and people might get double the pleasure, even though they know it's not healthy for them. But they know they get double the pleasure, and it just means more money into the pocket of Molson Cools.
Molson Coors helped pioneer the recyclable aluminum can revolution 60 years ago. And this year we're stepping up our efforts to tackle the global plastic waste crisis. Over the next 2 weeks, we will launch our Beer Print Report 2019, outlining the
recycling project. So they've been doing it for 60 years, and they continue to do it, and they're like doing better with it now and stepping up efforts. Well, that's great, but how does that matter in terms of my capital gains appreciation and dividends? So, okay, it matters more for capital gains appreciation. And what I do have to tell you guys is that it's a small thing that makes a huge difference. Maybe there is, because you got to remember, they're not the only beer company out there, but maybe there is like many other companies that sell beer, a couple of other companies that sell beer, right? And they may not be doing a project with recycling cans, but it's like a small thing that makes a huge difference, because then people might be like, oh, I'll buy from Molson Cools because they recycle and they help out the environment. They're not like only about money.
And on July the 15th, we repaid $500 million of senior notes through a combination of cash and new commercial paper. And we expect to continue to deleverage.
Another great point, they've repaid $500 million worth of debt, which means more equity for them.
And net sales revenue decreased 2.9%, driven by a 6.7% decline in sales to wholesalers, excluding contract brewing, partially offset by net price increases. COGS per hectare.
Alright, so there you go, guys. This explains why their share price is going down. It's because there's declining sales. I think demand has softened a little bit, but I believe it will eventually pick up. If not, this company will be in business many years to come. And you will get your dividends, guys. Those dividends, if you reinvest them, they will lower your cost per share basis, and you will probably make money just off of the dividends alone, like in a couple of years. Although I do believe there will be some capital gains appreciation. And also, guys, we are buying this stock, Molson Cools, at half of its intrinsic value, which means that we're getting it at a bargain, that this stock is a steal. So their intrinsic value is $121, and their stock price is currently around $56. So I would recommend this company at or under $60 a share. This company represents extreme value and great dividends over the long run. Anyways, guys, if you like this video, please don't forget to smash that like button, subscribe with bell notifications so you never miss out on another video, comment letting me know if you have any questions or concerns, and share. Once again, this is the Investors Channel.